Everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, everybody, welcome to my trading channel. Happy Thursday. I decided to wait till end of day. I was also doing sprinklers, which is so fun. I just can't even tell you. Anyway, that was sarcasm. We are looking at a brand new day. We just barely closed 23 minutes ago. And yeah, before we get too far, cryptoinfluencers.com is my home base. If you haven't signed up for the free channel here, this is a great way to do it. On the free channel, you can get in touch with me. There is a chat here. So right here. Plus, yeah, all the information in the description is worth looking at. Okay. And then finally, I guess Wednesday, we're doing live streams again. Love Wednesdays. Wednesdays are insane. All right, let's get talking about what's going on. We had an unbelievable close. So the past while, I've been talking about a bull trap. And I've been talking about, I've just been a little bearish. I've done a lot of things to position my portfolio for a leg down. And today's close helps to confirm that. I am looking, so on the Pro channel, I was telling everybody that if we have a bear trap, it is likely that this spot right here, these candles, will be probably the sweet spot for coming up, getting people excited. The bulls are back, people getting excited about Bitcoin taking off, and we will probably find resistance right here. This number, this close is 29,430. So that's what this close is right here. And our close that we just barely did was 29,472. So it was about $40 difference. This area is now becoming resistance for our bull trap. I think this is probably the highest we're going to see for a little while. Part of the reason, so we talked about how long green zones last. What we didn't do is talk about the behavior off of the 50. All right, let's take a look. We're gonna zoom out a little bit and I'm gonna head to I'm just gonna look for scenarios where what happens when we're in the green zone and we touch the 50. That's the question. Is the 50 helpful when we're in a green zone? Do we usually come up, hit the green zone, and we're off to the races? That's the question that we want to answer on this video. How important is it that we either stay away, or what does it mean when we finally get there? So let's just start at the beginning of time. And in this case, our first experience with the 50, we touched it. The next day we were in the yellow zone. Obviously this was, 5-6 cents, so this was not, maybe it's not the best data point. We didn't have much of a drop. That was sort of that experience. This one, we touched it early, but when we finally touched it for real, after we'd gotten deeper into our move, so far this was 53 days into the move, we finally touched the 50. And 4 days later, we hit a yellow zone. And from the 50 to our bottom was about 22%. It's crazy how much of a difference that tiny little move is. It's because back here it was just insanely volatile. All right, so now we're getting a major move. Major move. We did not touch the 50 until we exited the green zone. So the green zone 50 is not helpful so far. So let's keep looking. This was our first blow off top, 2011. We exited. Here's our 50. 50 comes up. This one was a near miss. Do you see how we barely closed below and popped back up? This would technically classify as a touch. So we'd have touched the 50, and it took us 6 more days of green, and then we were in the yellow zone, and we had a pretty solid drop. Crazy drop. Percentage-wise, this was massive. So we had 6 days or 7 days after touching there. That's our best case scenario so far. Let's keep going. Let's take a look and see. Here we had, let's see, we just went from $5 on up to 11. So this was a decent move. This particular move was, this is probably the exception to the rule. So we had a huge move from $15, so we really were up here. To get to the 50 was a 40% drop. So this might have been a special case. I don't know if this is the data we want to use for our analysis or not. But let's just say this was it. So in this case, this really, the 50 only helped us. We got support off the 50. We were in a pretty good spot. When we finally did touch it more frequently, then we finally broke down. So this might be a kind of an interesting data point. Don't know if it's an outlier. We'll log that away and check on the next move. This was our total bull market. So bull market, it was just pure green. We never touched the 50 until here. And this was after we'd had our blow off top. So $250 down to 50. Pretty brutal move there. So we did touch the 50 a few times. If you want to count that, then we're deep in the, this is a move that we have not seen. So the emotions are not the same. But if we're gonna take this data point, this gave us another 16 days ever since we touched the 50. Well, I guess this potentially could be it. So maybe 20 days at the most optimistic. And then, of course, we already had a rockin' move below the 50, but this move here was a 26% move. So that's pretty big. All right. This particular green zone, we never touched the 50 till we exited. This one was the first time we hit 1,000. We did not touch the 50 until we kind of exited. We bounced and then exited. This move would have been from here to probably here. So 19% after we left the 50 here. So we're starting to see that the 50 is, if we touch the 50, we're wrapping things up. And that's kind of the point of this video. It's just to be informed. We're not trying to take an angle of any kind. We're just looking at data. Here we were in a green zone until we hit the 50, and that's when we exited. So that one was ended by the 50. This one was ended by the 50. This one we didn't touch the 50 till we ended. Here we didn't touch the 50 till we ended as well. This one we touched it and we had 5 days. Still different emotions than our current market, but we're up here. And 5 days later, we exited. What kind of move was this? So we'd already come down a lot, but this one was a 10% move. Pretty tame compared to some of the data points we've been seeing. Blow off top to bottom was 35%. Okay, so here's one of the cases where the 50 was helpful. This is one of the few where we actually touched the 50. Our low was 931.74 and our 50 is 935. So it did cross it by $4 and it was obvious support. We bounced up pretty good and we still had a solid run. So it wasn't until this move that we really touched it. So let's see how far into the move we were. So 23 days in, we bounced off the 50. And so we're currently at 45 days. And here we're at 52. So this is getting a little bit closer. by now, this move is starting to mature. So at the maturity, we had only another 6 days. So 6 and 7 days is starting to become our average when it comes to this. This was a 50 touch. It was in the white zone at the beginning of the move. I don't know if this one quite counts yet. This was an actual touch. Pretty solid move. This was bull market. Where are we? 2017. Yeah, so we're on our way up on the bull market. So this is a valid point right here. But you can see how we reacted. When we hit this 50, we were way off of that thing. This was an electric move. The emotions of our touching the 50 most recently are not like this. They're more like this. So let's say this was our 50 here. There are 12 days left from this 50. When we touched it again here, we had another 7 days before we exited that scenario. This one exited the green zone on the 50. This one never touched, so it exited on the 50. This is the beginning of the move. This is the final stage of the bull market. So we hit it in the middle and we were on our way. So the emotions of the absolute bull market blow off top is going to be a little different. But we can see how we reacted really, really intensely off the 50 here. And then this is similar to the touch we've been seeing. A couple of days kind of hanging out here. And then we tried to move up, and then we ran right into our bull trap, which rejected us down, and that's when we exited. Okay, so we're getting a lot of data points. This is, hopefully this is informative. Now, let's look in more modern days. So the behavior of Bitcoin back before 2018 was just a little different. The landscape was different, the emotions, the price was different, things were more volatile. We have a little bit more of a mature market now, and so let's just see. We didn't even touch the 50 until we exited. Same here, same here. So our first more modern data point means that if we hit the 50, we've exited the green zone. This one, same thing. We went through, it was touching the 50 that exited our move. This is our first move to the 64. This was our first kind of bull market in our most recent cycle in 2021. During the bull market, the 50 is helpful. So I guess we've seen this a couple of times when we're really, really moving into our final stages of our blow off top. This 50 was helpful. We only touched it one day, and then we were kind of off of it, and then we moved up. We touched it here and moved off pretty good, and then here. So this behaves a little differently just because of the emotions of coming up so high. But so I don't know if that perfectly matches what we're doing. This green zone, we didn't touch the 50 until 2 days before, and then we exited. But I think this is enough data to show that the 50 is not helpful. The 50 is not helpful. Normally we're watching for support and moves off of something like this. And our first touch was here. Our last touch was here. If we measure it from our first touch, thank you. Okay, sorry. If we do it from here, 6 days will be in 2 days. 7 days, 3 days from now. If we took it from the last time we touched it, which was just yesterday, this could be May 2nd or May 3rd, somewhere in here. So this move, if we just look at how we've reacted to the 50 in a green zone, generally when we're hitting the 50, we are kind of doing our last kind of, these are bull traps. So I'm still singing the same tune. I know today was very exciting. We went up $1,000 today. It was very exciting. We crossed the 20. We have support off the 50. Normally you'd look at this and be like, cool, things are happening. But we just have too many problems with the shape of our market structure. We should not be down in this range. when we leave a range like this, we need to continue on. It's okay to touch the 50, but the 50 should be like up here. If the 50 is up in our consolidation range, then it's going to be a little more helpful. But when we've already had a breakdown attempt, and that's how we reach the 50, this move is weakened. And so if this is weakened and the bulls just gave everything they've got to move us to this area, I don't know how much more gas is in the tank. And so that's why I'm kind of in this position where I've done a lot of careful planning to keep my portfolio in good shape in the event of a drop. I'm still slightly long. My preference is still long, but anything where I have break-evens that are much, much lower, I'm essentially just picking up some profits on the way down and not completely neutralizing the position. It's more of a, I'm going to, conserve my long entries and just reduce the loss that I'm going to do, because I know that there is probably a pullback of some kind. The only exception is Bitcoin. I think Bitcoin's dropping. My entry wasn't fantastic, so I ended up closing my long completely. So I'm officially short on Bitcoin right now. So we'll see how things play. We'll see how things play out. But this was pretty cool. This was a pretty exciting move. And yesterday's stream was really wild when we were up here and we were talking about the bull trap and we just absolutely launched down. And then we bounced up. And I actually told the pro channel, I said, I cannot believe this bounce up. We probably have one more move to the upside. And look at today. So pretty crazy. But I really think that we're getting exhausted here. Very, very much so. So we'll be watching very closely. If we come down and find support somewhere along the top of our range, or if we have a pretty solid move above this, then we're in pretty good shape. That doesn't help if you're looking to hedge. So I'm figuring out ways to keep a little bit of long exposure, but definitely hedge against a drop. Because if the drop is going to be devastating, then we need to reevaluate risk. If the drop is going to really throw a wrench in things, that's fine. But if we neutralize the downward impact to where we won't be liquidated and there won't be issues with our portfolio, so that we can keep things in float. For example, if you've got enough liquidity that a move to 20,000 is not going to, destroy your portfolio or whatever, and you're just willing to be patient, then just keep holding. You know what I mean? But I do look at these things, not this. Where is it? It is this one. The liquidation index. These are the liquidations that we are seeing. I guess I'm a little late. Oh no, this has historical. Perfect. So just yesterday, everybody got wrecked. There were 189 million longs liquidated and 129 million shorts liquidated. So everybody who was overexposed just got killed. And so the purpose of my channel and what I'm trying to teach is this should never be you. You should never ever be in a position where your position gets liquidated. And if you're scared over a move up or down $1,000, your risk is not correct. So, in my situation, I have I'm limiting my upside gains if things continue, just to hedge against a good drop. And from all the indication that I can see, the drop should happen, and the target for this drop will be not very devastating. It's only around 25,000 in my mind, but this was not it. This was not enough to get there, and that's why this move is very, very much like this move. Not to say that we'll get a higher high. I don't think we will. We'll probably get a lower high, but this move is coming. And when this move comes in, then I'll be really excited, ready to position really well, because I still think there's a third move up here. And I think it's going to peak somewhere in June or something like that. And so just preparing for these types of things. So that's kind of what I'm looking at. The only other couple of just points to just talk through, Bitcoin dominance still continuing to rise. Today was a huge day for Bitcoin dominance. If we get over the 49, that will be a huge move. And you can kind of see the flavor of that happening with Ethereum. Ethereum's just not keeping up. This is the Bitcoin chart. You can see a move down and a pretty decent move up. And Ethereum, we had a really strong move up, came down, and we really have not moved. In fact, look at our close. Is that picture perfect or what? Our close was absolutely right here on our prior resistance. This threatens to be a reverse head and shoulders. So I have protection on a short here, but if we go from green to yellow on Ethereum, this will complete our head and shoulders right here. This is an absolute textbook head and shoulders. So if we get to 1820 and close anywhere in this vicinity, we will have not only entered the yellow zone on Ethereum, but we will also have finished our right shoulder. And these things have targets. This is a $318 move. This is the potential. So 318 from this line puts us on the 200-day moving average. 200-day moving average, that would be pretty rough. That would be pretty rough. If that's going to blow up your portfolio, then you'll want to hedge. You'll want to have a hedge in there and manage your risk that way. So yeah, Ethereum's close is pretty unbelievable. If Bitcoin is a bull trap, this is really showing some weakness. So I'm not entirely sure why. I think the fundamentals around Ethereum are absolutely phenomenal. I've been watching the withdrawals, and there have been 1.3 million Ethereum deposited. Huge number. So we almost have more deposits than withdrawals. So for people being so worried about the 2 million pending withdrawals, it's nothing. And so more and more is going to be locked up over time. There's still 600,000 to go. But the more that gets locked up, it's going to be really, really powerful. It's just really going to do a lot for the fundamentals. And it looks like our interest rate is increasing. So our interest rate's now 5.2%. More Ethereum for locking it up. So if you're holding Ethereum, I mean, it's kind of a no-brainer. As long as you can do it safely. I'm really hesitant to trust other companies to hold my stuff. But there are ways to spin up your own node and do your own staking. So that is definitely something. Also, an unusual thing that's going on. Since the merge, we have burned 120,000 Ethereum. But look how strange this is. In the last 5 or 7 days, so this is the last week, we've burned 15 or 16,000 Ethereum. This feels like an acceleration to me. Yeah, because in the last 30 days, it's been 50,000, and we're picking up the pace. It took us 20 days to burn 20,000, and it's taken us 10 days to burn another 30. So we're burning like crazy. And the culprit is Uniswap. Whatever their universal router is, it is absolutely using Ethereum like crazy in such volumes that it's creating a ton of burn pressure. And then just Ethereum transfers. I know because of price moving up and people getting excited, people are moving Ethereum around. But it's Uniswap, all that DeFi trading that's really causing the burn. So just some interesting things that are happening out there in the world. But I mean, this is pretty textbook. I mean, this is absolutely, this close was 1908. This one was 1908. It was a penny difference. Yeah, this is definitely structured. And it's not pretty. Very, very not pretty. So I put a pretty decent short on. If we exit the yellow zone, if we get to the yellow zone, I'll probably neutralize my long completely. So that's kind of where I'm at with the current stage of the market. These things move slow. 7 days is a long time for things to move around, and it's not going to go straight down. Like I say, our 50 is still coming up, and the 50 is pretty low. We're probably not just going to drop down to here. In 7 days, our 50 will be closer to like 300 or somewhere in there. And if we've gone sideways or shown some weakness and we just tick below it, it could be a really, really quick drop there. So we'll watch and see. But I figure it's worth being informed. It's good to see the best case scenario, and it's really good to be looking at the worst case scenario. So hopefully that can help you guys out. And that's pretty much it for tonight. I will do my best. Tomorrow's going to be a very busy day for me. My chat with Mexi Global and all of that is happening, and I'm going to be moving my daughter home from college and all kinds of stuff. So I don't know if I'll have a video out. I'll do my best. But hopefully this kind of gives you what I'm expecting for the next 7 days anyway. So that should take you for a few days. All right, you guys, thanks for being here. Thanks for following me. Appreciate it. And we'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.